Hi, it's Stephen Vincent. Today's Monday, May 16, 2011, and looks like we nailed another turn at BullBear Traders. I was one of the few analysts to call this decline, which really is pretty apparently turning into a C-wave decline here very rapidly. We're looking at the S&P 500 E-mini contract here. So we've got a wave 3 up, and then in February to March we had ABC for A, and then we had ABC for B up into early May, and now we're starting our C wave decline, which should be pretty scary and I think correct a lot of the bullish excess in the market. But so anyway, I think the 3 of C is underway, started today, or really started on Friday, and it should have a pretty rapid drop this week down to this yellow support zone, which acted as support back in April, and a small wave 4 bounce, and then a final 5 of C decline. Now, the question becomes, where does the support come in? We've got the 200-day moving average coming in here. Now, C, generally speaking, will go a little deeper than A. So we probably will be looking for a slight break of this major trend line here. This is your big blue trend channel here. Maybe I'll even back it out for you to see better here. So here's our blue trend channel off of the March 2009 low. So I expect we'll come down and test that and have a minor break of it and a break of the 200-day moving average. Spend a few days below the 200-day, and then that's where we'll rally from there after sentiment turns really bearish. Now, then we would get our wave 5 of 3 move up. Now, I'm calling it a wave 5 of 3, but it may very well be wave 5 of C, which means the whole thing off of March 2009 is just a wave 2 corrective, and we have a lot more downside to go in a big bear market, and that is certainly a possibility. I am not discounting that, and I'm starting to see a bunch of stuff that makes me wonder whether that might actually end up being the case. From our intermediate term trading perspective, doesn't really matter much at this point. We're going to get our C down here, we're going to get a wave 4 low, and then we'll get a 5 up. But the thing we'll want to do at that point is look at the technical quality of that 5. One of the things I'm going to be looking for is where this C wave bottoms out. So if we break the A wave low, you've got an expanded flat ABC correction, but there's some good chance that we get a nice bullish resolution to this, and that we get a running flat where C is actually higher than A, and actually maybe bottoms out somewhere in here, and we get a C higher than A, and there's some good reason to think that could happen, because B was considerably higher than the wave 3 end here, and spent a good amount of time above that wave 3 high. So there's some good reason to think that we'll see a really good resolution to this, but I am seeing some stuff on the technicals that gives me pause, and we'll certainly want to see what the quality of the rally is that we get out of this low. Just for an example of one indicator that's giving me a problem here, this is the SPX to NASDAQ 100 ratio chart, and we can see that we're seeing a long-term breakout out of this channel here, and looks like it's going to take out the 200-day moving average really soon. So this could be a pretty negative long-term indication that what we're seeing is the beginning of a topping process, a long-term topping process with one more final 5th wave up. And if that's the case, then I think we're in a good position to be able to catch that final 5th wave up, go short, and make money on the downside for however long that is, a couple of years I would imagine. So stay tuned. No matter what, we'll be on the right side of the market.